everyone. Ali Safavi here, CEO and co-founder of COVU. This is our first episode, first intro episode, I would say it's better, for the podcast. And what we're trying to do here is going to talk a little bit more about what we're trying to achieve with the podcast. Also, a little bit more about just, Insurtech in general. So it'll be a conversational chat, talking about what we think the future of Insurtech is, what the state is, and what is interesting about it. Obviously, I'm here with Tasos, my co-founder, but also a very seasoned Insurtech experience and Insurtech OG, they may say. And we'll have a conversational chat and see where it goes from there. It's not scripted, so I don't know what we're going to get into, but it should be fun. So Tasos, welcome to our podcast.
Thank you. Nice to see all of you. Well, actually, I'm not seeing all of you, but hopefully you're seeing me, and really excited about what we can offer to you today.
Perfect. So Tasos, I think it will be fun because you actually have a lot of experience. And I think one of the most interesting things about you, which I haven't seen in that many people, is that you've worked in the US, you worked in Europe, you worked in Asia, you worked in Australia, you worked in so many different countries and continents. And you had a very interesting role at Allianz that is very unique. So I think it would be fun to just talk about your background and we'll just go from there.
I guess personally, first, I'm Greek, born in Germany, spent time in Europe as a child and in the US, high school and beyond. So really exciting times for sure in the US in terms of the insurance industry. We're talking from the 1980s, through today. But in the US, I mean, one of the big things that I really learned is how to be able to actually put a business together. First starting working for a large company and then building my first Insurtech in what I would call the Web 1.0, or what we all call, I think, the Web 1.0 environment.
Yeah.
Of computers and the ability to be able to actually start building communities, and really took a different direction, I think, than a lot of Insurtechs did in the US. Successful kind of navigating through that to be able to do that after the acquisition of my company in the US. So ended up with 17, 18 entities in Europe and Asia Pacific that I was involved with, and of course excited about the WeFox results that happened over a 3-4 year period. UK with Revolut, and then here with the US with COVU. Excited about it.
Yeah. And how many countries have you worked with, in the capacity you had with Allianz and even before that?
60.
60. Wow.
Yeah.
So you've worked with 60 different countries and specifically insurance market, right?
Specifically insurance in 60 countries around the world.
And how many entities again did you launch or help launch?
17.
17 different entities.
Yeah.
That's so cool. And fun fact, even I think was co-owner, always had major stakes in many of the companies that I believe you also helped launch in different markets. What are some of the most interesting markets you've ever run into?
Well, this podcast probably will go to the US quite a bit. So the US is still a very interesting market. I'm a bit shocked at the lack of development, in the US market still in the Insurtech space. So there's still a huge amount of opportunity, a lot of still land grab that's there to be gotten in the US. Surprisingly, some of the fringe insurance markets in Europe are really dynamic and really interesting. Whether you're talking about those that are on the eastern part, that were post-Soviet Union, or those countries, very dynamic markets because so much change was actually happening. Portugal, Spain was really interesting, I've got to say as well. And then a lot of Asia, has been greenfield for a long time. Of course, the big market of China, I thought was way too structured, controlled for me. So not enough freedom to really innovate, but a lot of the Asian countries, we really had a greenfield opportunity.
Yeah, that makes sense. And I think let's start with this. Let's just kick it off very simple and very difficult at the same time. Let's talk about the philosophy, because I'm sure with this many years in the insurance space, you have a philosophy of what the future of insurance or Insurtech is, especially someone as passionate as you, that I don't think per se needs to work hard for that Insurtech future, but I think a lot of it is for the fun and the passion that you have for insurance and Insurtech and kind of the mission of the industry as a whole. So tell me more. What do you think is the future? Because I know what it is, and obviously we spoke about it,
Yeah.
and obviously a lot of COVU is built on it. But at the same time, maybe we just start generic, like general, outside of COVU. What is the future that you like to see?
Yeah, and maybe I'll go futuristic um, because the future will not be a linear line, a linear path. It's much more, I think, stepping stones, getting a few things right, a few things wrong as you go. But in the end, and if we look at the future of where insurance will go, in the end, it's got to be customer need being identified and create a either environment where we can improve the safety of that customer in real time, and then price risk associated with that customer when they actually we cannot avoid the risk. We have to actually be able to do it. And I think it'll be a situation where people will, in reality, for sure, be safer, but even maybe in those situations where you can't avoid the risk, they'll be able to actually participate in things, whether it's scuba diving, sky jumping. It won't be the underwriting process where you're trying to select which risks you want. It's going to be, kind of the old Lloyd's approach, which everything is insurable. And if we have enough data, we can price it. And let's just in real time price these products. And of course, the services around it, which is going to hopefully make you safer. And there's no reason why this can't be about technology in a very large way in terms of enablement. But at the end of the day, the purpose is the customer.
Let's talk about it. So in this scenario, if I understand correctly, we're talking about dynamic risk underwriting and pricing, or just the offering of risk solutions, which in this case is insurance, more than anything else. And obviously a lot of it is enabled with technology, because otherwise it's almost impossible, I would assume, to deliver a lot of this. So in this scenario, how do we find customers? Is it like an embedded play? Is it like a existing relationship play? Or, how does it work?
Yeah, I'm a big believer in distribution versus straight B2C. At the end of the day, if you can leverage partnerships to actually gather lots of customers, it's going to be a much more efficient game. And capital efficiency, of course, is a huge part of whether it's on the investment side, but also resource efficiency is how fast can you get to profitability and those kind of things. So I see it being partnerships. And there are a lot of places where customers gather. Of course, if you look at the stepping stones, like one of the big stepping stones today would be agencies, brokers, of course, financial institutions gather customers. Newer technologies like the time that I spent at Revolut and some of the payment apps and the bank lookalike concepts.
So Revolut is a very large digital fintech, digital bank, or kind of payment solution that has for about 60 million people or more.
Now over 20 million people.
20 million people. Yeah. It's based out of London, but it's very known globally. I think the US is a little less known, but it's very good.
Yeah, no problem.
Which Tasos was helping with launching insurance initiatives.
I launched the insurance
business. The cross-selling of insurance into the finance customers, which obviously is a big now trend or hot topic for a lot of people in the Insurtech space as well. So yeah.
And of course, the concepts of super apps, which started in Asia, but
like the Gojek kind of concept.
Customers are gathering to purchase, to do a lot of different things.
Do you think that's the future?
Yeah, it does. And I think a lot of people talk about embedded insurance and so forth. This is where, if you can actually look at the journey a customer is going to go into for whatever product, and it could be like in the old days, we did the bank assurance with homes and mortgages and all sorts of other things. But when you can embed insurance within a particular journey, and you can do it in real time, not underwritten. I think this is where the industry has kind of gone so far away from its base, right? The base of the industry is we insure everybody, and we have found the right price to make sure that everybody is protected and everybody is covered.
Yeah.
Today, we've gone the totally opposite direction, right? We basically are saying, hey, we only want this 0.1%.
The good risk.
Yeah. And then all the insurance companies are all going after this 0.1% of the risk. And then you have all these individuals who are effectively either priced out of the market or can't even get access to coverage. Even in a country like the United States, it's amazing how much of the business cannot be placed at standard. So we've got to get away from, I think, eventually we've got to get away from this underwritten and go more to like the mass aggregated pricing pieces. And the additional data that you have can help you differentiate pricing between people, but it will have to be within bands because it's just not realistic. As an example of the Florida situation that we have in the U.S.,
we have to consider subsidized.
Can't buy it.
Because like if we have a ban and then we have a very high risk person, basically like everyone else is subsidizing their price. Is that what you're thinking?
Yeah. So on the back end. So you will have some cross subsidization. It's natural. It's normal.
Cross subsidization,
because you can't always predict risk,
right.
And some people are more. But on the back, you can have a lot of sources,
like government money,
and part of it could be government money.
But it doesn't have to be.
Part of it could be industry association money. I think charity is already struggling enough where they probably can't also utilize some of that into the insurance part. It's possible, but I don't know. There are a lot of pools that are insurance pools also, and those pools can definitely be nonprofit pools, right? They don't have to be profit-oriented pools. So there's a few different places where you can get capital that doesn't require a specific rate of return, and the societal benefits might outweigh the financial cost. And of course, this is happening already today in the U.S. and a lot of other markets where governments have had to step in. They have their own insurance companies and their own pools, but there are more efficient ways than how they're providing them today.
I think one of the things that we're both very excited about, and that's actually one of the things I really enjoy about working with you, we're generally aligned in terms of the philosophy of the future. And the idea of more accessibility and affordability of not just insurance, but risk solutions is what we're excited about. And I think another part of it that we both believe in is that people don't want to as much be involved in that process. We create the transparency so they can be if they want to. But generally speaking, I don't think it's fair to expect people to know about risk insurance and kind of like spend time figuring it out while an AI or technology can figure all that out, or a human expert can, and just do it for them in a way that they still feel is unbiased, holistic, and transparent.
Yeah. No, the reality is people don't want to spend time on this topic. It's not a sexy topic. I mean, sometimes we used to call it, how do we make insurance sexy? And at the end of the day, you're not gonna make insurance sexy for people where they want to invest large amounts of their time to figure out what's the best coverage, what's the best needs, and all of that.
It's not meant to be sexy.
No,
we're talking about death and accidents, and how do you want to make that sexy? Yeah. And it's just weird to expect.
You just want to make people safe at the end of the day and provide protection. I also like the other point that you mentioned, which I think is really important, which is insurance at the end of the day is something that the community can provide. And if the community is an insurance company and has a desire or a combination services insurance company, because there's still a lot of room for not paying a claim to a customer, but actually solving their problem,
right,
or keeping it from actually happening. So whether it's the home protect orientation that's been happening more recently, whether it's with Alexa or with other, home systems, the piping in your home, sometimes, there's a lot of issues that have to do with water damage in your home or fire in your home. The Internet of Things will give us the opportunity, already can give us the opportunity to sense when these things are, at a breaking point, whether it's a pipe or whether it's a gas main or whatever, and just being able to actually identify that, being able to actually send somebody, to actually fix that before it actually becomes a problem would be part of the membership or part of the services. It doesn't have to only be, insurance for an after event plan.
I think if we want to focus on the outcomes, we're basically focusing on better protection, which again, protection is not just insurance. It could be risk management, it could be risk solution, mitigation, recovery, and even uninsurable risk. And frankly, there's different ways of thinking about risk management. But then it's also affordability, is that how do we make it more affordable for people? And then it's convenience, right?
Yeah.
So when we're thinking about it, I mean, let's start with affordability because you just talked about it for a second, but go a little bit deeper into it. When we think about the insurance P&L, obviously, I think on average, 40% is the expense ratio. Is basically like all these overhead costs, supervision costs, and then 60% is the claims portion of the loss ratio. So, but both could be impacted. I mean, the loss ratio could be impacted through risk recovery and risk management and risk mitigation, the IoT systems that you just mentioned, and then the expense ratio, obviously, with much more efficient infrastructure, can potentially be better managed. I mean, obviously, we always have a distribution question that is different, but in theory, insurance could be done much cheaper. In theory, but obviously it's a very long-term plan, a lot of ideas, but it can be a lot more affordable than it is today. So tell me a little bit more about how you think about the affordability piece and like the different pieces that you feel like provide the most amount of value short-term and long-term in terms of getting there.
Yeah. So affordability at the end of the day and this P&L, that is the insurance P&L, gets built by policyholder by policyholder by policyholder. And the ability to be able to have information, data at the end of the day about an individual and their risks will help you actually build the P&L for the insurance company on that individual basis. So I think the first step is not just affordability, but it's access. Again, like I've said, there's so many people who just don't have access to insurance. So the first step is access. The second step is, how do I get data and information about a customer to help them be more safe? And that's the pricing component. The part that you mentioned that was the 40% that, let's say, is non-money going back to the consumer in terms of claims, this could be reduced dramatically, right? So there is no reason for 40 cents on the dollar to go to all of these costs. In an old world concept, there should be some administration. Totally logical that there's some administration of all of these different pieces. And with technology, with those improvements, there's no reason that a larger share of the pie can't actually go back to consumers. And there are a lot of opportunities to make the loss component, as you mentioned, to make the loss component just smaller. Because when you understand with the data, the policyholder, the customer, and then you understand their environment, whether we're trying to insure a home or whether we're trying to insure a vacation or whatever it is, that data will help you actually mitigate the risk. And so many times it's advice, it's services, like in the healthcare space. I mean, the cost of healthcare has just gone, up dramatically over the last 20 or 30 years, making it virtually, not affordable. So you have to be able to be in a position where you're actually, identifying what are the risk factors, how can we actually help solve them. And I don't want to go, completely into the embedded, pieces for consumers, but logically there are going to be some metrics that we will volunteer to share because it's going to be for our health, with our doctor, potentially with our insurer, in order to be able to actually provide better coverage.
Yeah. And when we're thinking about better protection, of course, there could be better insurance coverages, policies.
Yeah.
There could be better mitigation, better recovery. What's your protection ecosystem philosophy? Like, what does the ideal protection look like in the future? I mean, you spoke a little bit about the dynamic risk pricing, risk modeling, holistic.
Yeah, and this is where the community is really critical, right? So all the partners that are behind, at the end of the day, you're going to have an app.
Yeah.
And it's just going to be where we're going to go, right? Web 1.0 was a laptop. It was I remember my compact computer where you're carrying it around. It's like 50 pounds, Now it's just a small device.
Yeah.
It's a small device. And there's no reason why we can't manage everything associated with ourselves with that small device. And, so there's going to be a point in time when the amount of information and data that's associated with our lives is in here, even more so than today. But behind that is going to be, at least for us at COVU, to be successful long term. Lots of partnerships, not only for distribution to be able to gather customers, but also to service them. So whether it's a car repair place or whether it's a medical care facility, or companies that basically have special services that can actually avoid risk, that you're going to be able to enter into. So I definitely see that you need a full ecosystem behind the scenes. And I mentioned earlier, I think the capital providers, you need actually investors who are putting in capital.
The risk pool or into the operation?
I all of the above, because as we all know, technology companies, especially if you look at the biggest technology companies, they didn't start profitable. They had a very fast path, most of them, Amazon excluded, very fast path to profitability, relatively speaking, but they needed a lot of capital. They needed a lot of capital to get there. But ongoing, you still need these risk pools with somewhat predictable returns. And I think this is where, of course, technology and AI and machine learning can actually help a lot in predicting, what those returns need to be. If your returns are more predictable, you don't need as much volatility on the upper end. You don't need as much potential profit if they're fairly predictable. So this will also bring the cost of capital down.
So we spoke about the future, and obviously there's a lot of ideas about what the future could be. But the reality of the market is today, right? Like, where are we today to be able to get there? Because I feel like that's the important. First, we have to set the picture of which direction we want to go, to have the intent, to be intentional about how we push the industry forward. So now the question is, how do we get there? I think that question was a big part of why we started COVU together, because we were both excited about, look, to get there, we need to start with customers and start becoming their trusted, to help enable at least the trusted advice piece with the customers. And this is why we're so excited to work with agencies, because they have the human component, they have that human personal touch, trusted relationships that we obviously, after a lot of research, at least I did, because you obviously have been doing this for many years. But it all starts with customers. Tell me a little bit more about how you think about this.
Yeah. So today, we're not much further along, for those of us who've been around from the 80s and from the 90s and from 2000, on the surface. Underneath, there have been a lot of things that have actually happened to enable what's going to be next. But people have not really put it together in the US. I mean, this is where I'm really excited, because the opportunity is absolutely huge to be customer-centric first, in order to basically make sure that customers' needs are serviced in a convenient way, because this is the first step. The first step is, as we said, customers don't want to spend too much time on this topic, so they need convenience. They need convenience, and there's technology capability out there, and we're really bringing it together to make that happen, so it's convenient for a customer. Especially, we're talking about independent agencies or brokers here, because I think at the end of the day, if you're going to meet a customer's need, you can't be a single insurance company, or you cannot be an agent of a single insurance company, because the breadth of needs customers have cannot really be met by one insurance company. So we really work with independent insurance companies. We work with many insurance agencies or brokers, and then we work with many insurance companies to be able to actually find the right product. Over time, we've identified that there are gaps of coverage for individuals who are being effectively priced out, or the access is not there. So we will be customizing coverage for that. And this is a model that's been around for a while without technology, and it's met customers' needs because it understands customers and focus on niches for customers. I think with technology, you can have the breadth of services. And COVU, I think, is in the right place at the right time in the US to be able to actually leverage and deliver outcomes for agencies, which are basically customer-centric, rather than insurance company down to a customer.
Customer centricity is a very hot topic in insurance. I think Insurtech started with customer centricity, or at least the idea of customer centricity. But I think customer centricity means a lot of different things to a lot of different people. The approach of it, not the core, is probably the same. The approach of it is pretty different. So how do you see the evolution of Insurtech? from Web 1.0 or like the Insurtech post pre 2015. Let's just call it Insurtech 0.0. Like basically every technology for insurance that was there. Putting that aside, how do you think we went from Insurtech 1.0, which was 2015 probably to 2020 or 21, to now this new generation? Especially, I think the trigger point was kind of the crash that happened with Insurtech in the market, the MGM model, and into that. Like, what did people get wrong with this customer centric model that you think centric model that should be different or that could be done better?
Yeah, I think those are the individuals that are listening to this and are part of the insurance ecosystem, have recognized one big problem that occurred, and that is they underestimated the complexity within the insurance business. On the surface, it looks like you can cut through all of this complexity and just create a new model for customers, for the environment, for everybody, and just cut right through it. But the lack of understanding, and so this was individuals that primarily didn't spend the time to really understand insurance and just thought they could disrupt or create a brand new way of doing insurance. That has not worked, right? I mean, it's like if you actually don't take into account complexity, whether you're a scientist or whether you're involved in any field, an architect or whatever, and you cut corners on the mix for the cement, or you really don't fully understand what's necessary, things implode, and they've imploded. I think the B2C full stack, words that I don't know if everybody recognizes, but basically you manufacture the product, you actually create the pricing for the product, you distribute the product to customers. That has not worked. That has not worked. This does not mean that you couldn't have a small business, niche business with a particular customer group, small, that couldn't actually do that in a simple line of business. But across the board, that has definitely not worked. So
what do you think that is?
That's a casualty. I mean, there are two big reasons. One is CAC. The cost of a customer was too expensive. In other words, you've got to convince a customer. Where do you find them? Not on Google, Facebook. All of these entities are actually quite intelligent at pricing access to a customer that's in their favor. Not necessarily your favor. So the second thing is, isn't that funny?
Yes. Yeah, I know, it's great time.
Yeah. The second thing is pricing. So you basically cut across the complexity, but you actually are not pricing therefore. So in other words, you're pricing to the competition, which in every single mix, that competition can be not supportive of your P&L.
Right.
So most of these entities not only had much higher acquisition costs for customers than was supported by their model, that could be supported by the model, but the other one was the loss ratio. In other words, in order to gain a customer, you had to get them to pay. You had to ask them to pay less than what they were doing it with a competitor. Of course, you could do this for a very short period of time. Sooner or later, the capital provider, the investor, or whoever it is, or the reinsurer, is going to eventually say, I cannot support any more losses. I mean, thank goodness the reinsurers actually stuck in there as long as they did and risked their P&Ls and lost, because reinsurers lost a lot more even some of these Insurtechs actually had. So this is, I think, CAC, and then just pricing it without the competency, the full competency and utilization of all the right tools. This is the complexity part of the business that wasn't taken into account. So I think that's gone. And the other thing I think that is still missing is the community model of being able to actually understand where are you going to cross-subsidize, where are you going to take, let's say, lower cost than is necessary in order to help fulfill the high risk areas, because many of them not only didn't price right, but they actually accepted risks. And generally this would be a good thing. They accepted risks that were in the market not really insurable, or many people didn't have access. So they accepted those risks, but they didn't cross subsidize anywhere. So in other words,
They just had the bad risk and
You're going to lose a lot of
good
money.
risks. So yeah, like overall, it was
And altruism, if it's not sustainable, for me, is not altruism.
right.
You're just dislocating the marketplace, and eventually you're going to create another hole. When you leave, you're going to create a hole that's very hard to fill because nobody's going to come in at the prices you had, because nobody wants to lose money.
Makes sense. To just wrap up the conversation, two things. One, what is let's call it a relatively controversial opinion that you have about the insurance space that you think is a little bit different than, like the popular belief?
Controversial.
Relatively. I mean, it doesn't
Yeah.
have to be about everyone. What do you think?
So controversial for sure today is our approach and kind of my approach of going to the mass market.
Yeah.
Things have gotten to a point where insurance companies and in many cases distribution has started to focus on narrower and narrower areas of the market. And I think the popular belief is you cannot be successful across a market. You can only be successful in identifying niches and focusing on target customers and target areas and whatever. So for me, I'm a bit more controversial there because I think you could actually go after the mass market. The structural parts of the business that are necessary for you to fulfill the needs of the mass market are the same. And all that you really need is enough people who want to take on a risk, insurance companies and reinsurance companies, and maybe government as well, to be able to actually fulfill those needs. So I would say that's controversial. Going after the mass market, I think is controversial. And for sure, my approach is go where the customers already are. So I think this is going to become a fad. It's already starting to gain momentum. So rather than actually trying to actually get to a customer directly, find a partner. And for me, the best partners for sure have been independent agents and brokers because they are actually customer centric at the end of the day. They have relationships with customers.
They provide human advice.
Human advice. And it's across products and it's across suppliers at the end of the day. They're not trying to actually one size fit all concepts. So I think they're actually the best. And I don't know if it's controversial today. 10 years ago, it would have been very controversial. 5 years ago, it would have been, why would you want to do that? Today, you actually see, I think most distribution going that direction.
Yeah, no, I think, to be honest with you, I started as a B2C in a B2C space as well because it felt like it's more logical that way. But the reality of the market is, after a lot of research and a lot of mistakes, to be frank, that most customers still want to talk to someone. I was surprised by 6 to 7% of people said they actually are willing to go to even an agency office to sit down and talk to them, or at least have a phone call. 80% of people who get an auto insurance application, buy after you talk to someone, which for me was like a big aha moment. I didn't realize how big this is, how big the need of that personal touch it is. And I think for a lot of VCs, a lot of people that come from the tech space or just generally live in a urban area, not suburban, urban area, they underestimate how important that is and how complex insurance is and how much need there is in kind of like human support and comfort. And that's why I'm a little bit, I think embedded has a play. I definitely think embedded has something to it. I don't think it's as exciting as people think it is, at least for me in the beginning, until the human behavior also changes. People are more comfortable buying without a human advisor. Obviously, with travel insurance, it works great, but like, for example, for, I don't know, like sometimes home insurance, especially with policies that you need advice on, like how much liability to get, I don't know that. I just feel like embedded.
I think people sometimes, the insurance market is very big, right?
Yeah.
So 6 trillion. Today it's 6 trillion. It'll be 7 trillion probably in about 10 years. Embedded is going to grow very fast, but it's going to grow very fast to 300 billion. So we have to put it in perspective, right? So is it growing faster than the overall? Yes. But is it going to be 50% of the market or even 10% of the market? No.
Yeah.
I mean, at the end of the day, it's not going to be that size. Still, most insurance, at least for the foreseeable, 4, 5, 6, 7 years, is going to be a human touch, distribution. And as you know, in the US, this is reality as well, where most insurance is still delivered by humans.
Makes sense. And I think last thing that it would be helpful to get your thoughts on is after the podcast.
I think at some point in time, looking at customers' needs and where the gaps are in the industry, would be interesting. It's an angle that I have not seen in too many of the podcasts. So many of them, if I can say it, are a bit judgmental about the market, about a particular insurtech, about whatever. And I think that is not as helpful. I think if you can uncover opportunities in these podcasts that maybe are going to be relevant for some of the audience, and I would love to start with the customer first. That would be great.
Yeah. So we're trying to make this the Insurtech podcast. Basically, talk about everything Insurtech, the future of technology and insurance specifically. We're very passionate about it. Obviously, we have a good amount of people that we know, and we could always bring up the podcast. So if you have any feedback on topics that you're interested or excited to hear more about, let us know. I mean, for us, this is an experimentation. It's another pseudo startup. It's something that we're just playing with and seeing how it develops over time. So always open to feedback, and it's only as good as what the audience wants. Thank you for listening. That's it. That's a wrap. Sorry for all the noise. Hope you at least enjoy the background.
Thank you. Bye.
Thanks, Tasos.